Welcome to a VSA Capital video blog, and today I have the CEO of Panthera Resources, Mark Bolton, with me. Hi Mark, how are you?
Good, Andrew. Thank you for having me on your podcast again.
Yeah, and it is fairly recent since we last had you, but today we've announced a placing of about £2.77 million at 7p for Panthera. It was heavily oversubscribed, I'm delighted to say. It's a long time since I've had to tell people that allocations have been as low as they were. But maybe, Mark, you could just explain briefly why it was you needed to raise this money.
Look, our litigation costs are almost all funded by our facility with LCN. However, that facility, which is significant, 13.6 million, does not cover our annual overhead costs, which I have to say, very modest for a listed company. We've typically been doing a raising about once a year. We did our last raise in May, so we were a couple of months out from doing our next annual raise. And we had to make a decision: do we do it now, or do we wait for after the statement of claim? On balance, and considering the advice from our board, yourself, Andrew, and also the input from some major shareholders, we've elected to go to market at this point in time.
Yeah, and look, your last raise actually was at 5p back in May 2024.
So 5.5, yeah.
5.5. And here we are in May, in February, less than a year on. So you've actually gone up very nicely. Thank you very much. That's 40% or so, slightly under 35%.
We always want it to be higher, but it's a healthy premium.
Yeah, but as you know, I always see you as a sort of zero coupon bond with a sort of 50% yield. So, you just keep slowly going up, but obviously the share price trades up and down within it. Obviously one of the reasons it was oversubscribed was that we did cap the raise at £2.77 million. But you have to be slightly careful what you say, but effectively what that's given you is the runway to go all the way that you need, particularly as you've got some warrants there that can exercise, which will top up your cash pile. So, I think it would be fair to say, and let me put it this way, that shareholders should not expect you to be coming back to the market for the foreseeable future.
Well, that was part of the key objectives. So the two questions we had to ask is timing and quantum. And we've elected to go for a multi-year strategy. So roughly speaking, our annual burn rate is about $1 million US. We've raised 2.75, which is well over 3. And as you correctly pointed out, we have some in-the-money warrants for about another £1 million in December that expired, 6.68, which are comfortably in the money. So all up, we're looking at this year securing financing of £3.75, which is roughly almost $5 million US dollars. So you don't have to be a rocket scientist to see that several years of runway. And that is the key message here, is several years of runway. If you want to get our stock, the only way forward is through the screen. And we wanted to have that situation in place ahead of the statement of claim and not be sold down in the statement of claim by opportunistic investors who knew we were coming to the market very shortly thereafter. And it reinforces this concept of a zero coupon bond because as of now, no dilution for multiple years.
And so just on the actual case itself, the big next news is going to be the statement of claim, isn't it? What you actually are going for. When are you hoping to get that? And I know it's difficult for you to comment on the size.
I can't comment on a precise date, but I can't comment on a precise date. But what I can say is it must be on or before the 16th of May. So we're looking at roughly 8 odd weeks.
Yeah, so pretty soon you should have some actually really interesting news there. And then it's literally a sort of a process, isn't it, of, you said this, I said this sort of thing, but maybe you could elaborate on that slightly more.
Sure. Look, it is a very structured process. There's 4 rounds. We submit our memorial, which includes our statement of claim first. India then has the first response. We then resubmit an updated memorial, and then India has the second response. So there's effectively, each side has 2. There are other other important matters that get dealt with along the way. which, if those things occur, we'll advise the market along the way. At this stage, we've only put forward the immediate timetable, which is that statement of claim date, and we'll update the market on further key dates in the timetable as they emerge over the course of the year.
Now, the other thing that I find, you often say, well, we don't give much news because there isn't much news. But actually, of course, what is actually happening is this asset class you sort of sit in, which is the litigation companies, is growing by the day. And, the latest one that a lot of people know about is Emerson. And so, of course, every time someone from the asset class gives good news, it sort of helps you along as well, doesn't it?
It does, actually. There was a real turning point probably around September, October last year, where we started to see news from Indiana, Montero, Emerson, and others, including us. And notwithstanding the perceived lack of news, if you actually go and count the number of RNSs we put out in the last 12 months, it would be well above the average. And in a vehicle that's supposed to be no news.
Yeah, so, but this is just a very short sort of update video, but, you're now basically fully funded. The process is on its journey, and the journey basically goes from sort of the bottom left towards the top right-hand corner, the classic graph, if you see what I mean, Mark. News flow is due to come out, and you're in a space where there is, should we say, gathering interest, because obviously we can't talk about who was in the book, but I think it's fair to say that the book was quite a global book and very sticky money. And what I would describe as very smart family office money. So it is all looking pretty good and exciting, but you just have to be very patient, which not every investor is. But do you think that's a fair summary?
It has been an interesting journey for us, but also for the class. Initially we saw a little bit of retail interest, and then we saw early adopters in the family offices. And more recently, we've seen much more conviction and informed investors in this class find us and seek us out. The book, as we see it, we built overnight, is arguably the best book the company has. It is the best book the company has put together, and arguably the best book I've had the luxury of having in 10 plus years, because of that high demand, and because we invested the last 12 months and actively seeking a specific shareholders that support our strategy and are not looking for a 25% move on to the next toy. We're looking for someone who's got a 2-year time frame, who want to make 2, 3, 4 times their money before they would even consider the exit. So it wasn't just that the money was there and the timing was the right timing. It was a year of work to find that book before we even pressed the button to build the book.
Again, just sort of as a general comment, people obviously know about LCM, Litigation Capital Management, that's listed in London, Burford. These are the people that are paying all the costs for these cases. The underlying companies up until now, I think, have been less well known. GreenX obviously was the poster boy. But actually what we are seeing more and more now, and I'm interested in your view, is that actually you're all sort of working, not together, but you all know each other. And the asset class is becoming more of a proper grouping. And people are saying, actually, I don't want to just be in Panthera. I want to be in a collective set of litigation cases, because that de-risks me, but I still get this zero coupon bond effect. Do you think do you notice that in the market? That's sort of what shareholders are looking for?
Very much so. In fact, I've sometimes garnered the ire of the brokers by actively encouraging people to diversify their investment in the space. Unfortunately, all things are not equal. So whilst there is circa 10 odd of these plays out there, in fact, I think globally there was more than 10, it's probably 15 to 20, but there's actually the short list of quality claims is actually quite small. But my rough corporate finance experience for this type of exposure, a diversification of 2 or 3 is more than sufficient.
Yeah, look, it's a very interesting space. this is a very useful update. I think we'll keep this video short at 10 minutes. Obviously, if anybody wants, VSA Capital has recently produced research. We have a short-term sort of target price of 40p, which obviously is significantly higher than where we are. But obviously, just bear in mind what we're looking at is not the outcome of the case, but we're saying this is where it should be valued on the journey. So also bear that in mind. But obviously, if anybody's got further questions on this, you can always contact Mark or myself at VSA Capitals. But thanks, Mark. I appreciate you coming in.
Thank you very much once again, Andrew.